If you have been online in the last 48 hours, you have almost certainly seen the warnings. There's a date circulating through the silver community, February 15th, and the narrative is terrifying. They are telling you that a new IRS rule kicks in, that a surveillance crackdown is beginning, and that if you don't sell your silver immediately, you could face mandatory registration or penalties. I need you to stop and listen to me right now. I have pulled the actual IRS schedules. I have reviewed the text of Form 1099-B and Form 8300, and I can tell you, with 100% certainty, the panic you are hearing is a lie. This February 15th deadline is not a new law. It is not a seizure. It is a decades-old clerical date that is being weaponized to scare you out of your position at the bottom of the market. But the tax code is confusing, and the fearmongers know that. So in this video, I'm going to walk you through the 3 actual reporting systems that exist, show you the proof that your privacy is safe, and explain why acting on this fake deadline is the fastest way to destroy your wealth. Let's look at the facts. Right now, a dangerous narrative is circulating through the precious metal space, claiming that a devastating government action is scheduled to hit silver owners this February. If you hold any bullion, you have likely encountered these frantic warnings suggesting an imminent IRS ambush, a new disclosure regulation, or a federal mandate forcing you to register your stacks under threat of heavy fines. Listen to me very carefully. The stories you are hearing about this mid-February deadline are fundamentally incorrect. This is not a regulatory assault. It is not a rule targeting silver specifically, and it certainly is not proof that ownership laws have suddenly shifted against you. If you liquidate your positions based on this fabricated hysteria, you will be the only victim. I am filming this update for gold-silver market because it is critical to shatter the confusion and provide you with verifiable truth. Not anxiety, not engagement bait, just reality. In a sector this turbulent, where feelings run high, the gap between moving on facts versus moving on fear is the gap between securing your future and erasing it. But before we dive deeper, if you are viewing this and haven't subscribed, press that button immediately. The algorithms rarely support this type of sober analysis. They favor the sensationalist panic clips. They boost the fearmongers. However, rational evidence-based reports like this one rely on your support to reach the investors who need protection. I've also placed a link below to our private WhatsApp group where I post breaking alerts. And if you use X, the platform formerly known as Twitter, follow us there because that is where our initial updates go live. Now, let's unravel what is truly occurring and why you are being deceived. Periodically, a predictable ripple of anxiety sweeps across the silver community. A specific calendar date goes viral. A snippet of legal text gets shared without background. Suddenly, holders are convinced the state is coming for their metal. The current trigger date is February 15th. Online threads and videos insist this day marks a fresh IRS offensive against silver investors. Some voices scream for you to sell instantly. Others imply that holding on will trigger mandatory surveillance or penalties. The anxiety is intense, and I get it. No investor wants to be blindsided by a regulatory ambush. Yet, when you pause and examine the documentation, a radically different reality appears. The date of February 15th is not a new IRS offensive. I will repeat that so it lands. February 15th is not a new IRS offensive. It is neither a silver-focused regulation nor a sign of changing property rights. What that date actually signifies is a routine administrative deadline. It has existed for years. It governs commercial entities, not private stackers, and it is being twisted into a weapon of fear by individuals who either lack comprehension or profit from your anxiety. Let me guide you through the mechanics so you can verify the truth personally. This February date has been part of the tax calendar for a very long time. It relates to information return timelines, specifically documents like Form 1099-B, which specific brokers utilize to log qualifying trades. These are papers filed by dealers and financial institutions, not paperwork you file, simply for possessing bullion. Here is a crucial nuance the alarmists constantly omit. Tax deadlines often adjust for weekends or federal holidays. For this filing season, the official IRS guidance actually lists February 17th, 2026, rather than the 15th. The discrepancy is strictly a calendar adjustment, not a legal one. Someone likely glanced at an outdated PDF, spotted the 15th, and began shouting without verifying if the date was even active this year. Thus, when headlines scream that the world changes by mid-February, they are typically reacting to a standard filing window, not a fresh statute. They are taking a decades-old clerical deadline and framing it as breaking news about a war on silver. That isn't reporting. That is manipulation designed to harvest your clicks, attention, and emotions. Now, I want to clarify where this hysteria originates, because identifying the root cause protects you from future scares. The majority of silver-related anxiety stems from blending 3 distinct reporting systems into one terrifying narrative. Each mechanism has unique triggers and goals, yet they are frequently described as a single monster. This conflation makes the risk appear far larger than reality. Let's dismantle each system so you know exactly what you're facing. System 1 involves the taxes you self-report. If you sell metal for a gain, capital gains obligations might arise. That duty belongs to you, not the shop you sold to. You list it on your annual return, just as you would list profits from stocks, property, or other investments. The obligation to pay taxes is not a new crackdown, it's just the law. Here is the vital takeaway. This is not new. This has been the standard for decades. It covers numerous asset classes, not just gold and silver. There's nothing novel here, nothing specific to February 15th, and absolutely nothing that demands you panic sell your stack today. If you liquidate an asset above your cost basis, tax is due. If you sell below cost, you might claim a loss. This is foundational tax code applicable to every citizen selling appreciated goods. It isn't a silver raid. It is simply how the Revenue Service operates. System 2 is the dealer or broker information reporting. In specific scenarios, a merchant must submit an information return, like the 1099-B. This is where the February date enters the conversation, but not how the fearmongers claim. You must grasp this detail. This filing is not automatic. It hinges on the product type, specific volume limits, and reportable criteria defined in IRS instructions. The vast majority of silver deals do not trip this wire. I will say that again because it is essential. The vast majority of silver deals do not trip the 1099-B wire. The regulation targets narrow categories of trades involving precise items and precise amounts. If you are offloading a tube of eagles or a bag of junk constitutional coins, you're almost certainly not triggering any dealer report. And even if the report is required, the dealer files it, not you. Your duty remains unchanged. Report your income honestly. The 1099-B, when used, is merely a tool for the IRS to cross-reference reported income with actual sales. It is not a new spy grid. It is a reconciliation method that has been in place for ages. System 3 involves cash transaction reporting via Form 8300. This document appears constantly in these doom-mongering threads, and it is the most consistently misinterpreted. Form 8300 is required when a business accepts cash sums of $10,000 or more. It exists to enforce anti-money laundering statutes. Its goal is tracking massive cash movements across every sector, not just bullion. It hits car lots, jewelers, real estate firms, and endless other trades. Here's the detail the alarmists ignore. Form 8300 targets the method of payment, not the metal itself. If you purchase bullion using a wire, a personal check, or a bank card, Form 8300 does not apply, regardless of the purchase size. It only activates for physical cash over 10 grand. Furthermore, Form 8300 has zero connection to selling silver. It is a form for receiving funds. If you sell to a shop, they pay you. They are not taking cash from you. Different document, different trigger, totally different mechanism. So, when an influencer mashes up capital gains, 1099-B filings, and Form 8300 into one horror story about a February 15th seizure, they are either deeply confused or intentionally misleading you. These are three independent frameworks with three distinct functions, and mixing them generates fake anxiety that serves nobody but the clickbaiters. Let's tackle the distinction between buying and selling, as this is another zone where confusion thrives. A major reason fear propagates is that acquisition and liquidation are discussed as if they are the same event. They are not. When you acquire silver, usually, there is no automatic paper trail. The deal is private between you and the merchant. Currency moves one way, metal moves the other. Unless you hand over $10,000 in bills, tripping the dealer's Form 8300 obligation, there is typically no federal reporting whatsoever. You do not register the metal. You do not alert the state of your holdings. You do not file a declaration because you bought a coin. Owning silver is lawful. It is private, and generally, it is off the books. When you liquidate silver, reporting rules might apply, but only in narrow cases. Now, we must address the difference between paper and physical silver, because this is where emotions often boil over. Paper products, like at ETFs or brokerage accounts, live entirely within the banking grid. When you purchase ETF shares, the trade is logged. Your broker records it. Surveillance is baked into the architecture from the start. You lose no privacy because you never had it. Physical metal is distinct. When you possess physical, you hold it privately. Your wealth sits outside the digital ledger. There is no automatic signal sent just because you own it. However, here is the nuance. When physical metal enters a reportable sale, paperwork might follow. Not because the metal became illicit, not because ownership is now tracked, but because the transaction itself triggered a compliance rule for the participants. The silver remains the same. The trade generated the paper trail, and grasping that difference is vital for keeping your head straight. If your silver is in your safe, the state does not know and does not need to know. There is no registry. There is no ownership mandate. February 15th alters none of that. Nothing has altered that. So let's answer the ultimate question. What truly changed for silver investors? For the vast majority, the answer is zero. Rules for owning metal remained static. No sudden registry appeared. No silver-specific police force was deployed. No February 15th raid was decreed. What actually shifted was the noise level. And noise provokes emotional errors. A person spotted a date on a tax calendar. They misunderstood its meaning. They filmed a warning. Others reposted it without verification. The platforms boosted the content because anxiety drives watch time. And suddenly, millions of stackers are sweating over a threat that does not exist. This is the anatomy of a manufactured panic. It begins with a grain of truth, a real date on a real form. It gets stripped of nuance. It gets amplified by the network. And by the time it hits your screen, it is mutated into a fiction completely divorced from reality. The true danger is not the IRS. The true danger is acting on false signals and making moves you will regret. Now, let me offer a practical mental filter for judging these claims later, because this won't be the last time someone attempts to frighten you. Before you react to fear-based videos, pause and ask 4 specific questions. Question 1, are you buying or selling? The regulations differ. Most fear focuses on selling, yet the content often blurs the two. Question 2, what payment method is involved? Cash over 10 grand trips form 8,300. Wires, checks, and cards do not. If you aren't using stacks of bills, Form 8300 is irrelevant. Question 3, is a W-9 being requested? If the dealer needs a W-9, they likely expect to file a 1099-B. That is not a threat. It is a paperwork indicator. If no W-9 is asked for, the deal is likely not reportable by the shop. Question 4, what product and quantity are in play? Not all silver is treated equally. Specific coins in specific volumes might trigger forms, others won't. The details matter. Let's switch gears and discuss what is genuinely occurring in the market. While the alarmists obsess over phantom crackdowns, real events are unfolding that demand your focus. Hycroft mining recently surged 19.5% in one session. The share price hit 42 cents after buyers rushed in on renewed vigor in gold and silver spot prices. This rally followed 4 days of losses. Bargain hunters arrived, and the bounce in metal prices sparked a massive run. As of the latest reads, spot silver climbed over 2% and gold rose nearly 2% as capital flowed back into hard assets following last week's sharp correction. For those unaware, Hycroft is a U.S. miner developing one of the largest gold and silver resources in Nevada. This is a domestic project in a secure jurisdiction. And here's the news I find most telling. Hycroft just announced they have intersected the highest silver grades ever seen in the Vortex system at their Nevada property. The drill cores across all depths and angles show resource continuity. Let me translate that. They are hitting better silver in a deposit that extends everywhere they look. That is exactly the signal you want from a developing mine. It implies the asset could be richer and larger than early estimates suggested. For context, when a miner reports rising grades and solid continuity, it usually means the economics are getting better. Better grades equal more metal per ton of rock. Continuity means the ore body is solid, not fragmented, making extraction cheaper. This is the type of data that drives mining stocks. That 19% jump reflects the market pricing in these drill results alongside a recovering metals sector. I want to be precise here. Hycroft is in the development phase, not production. They are working to build the mine, but they aren't selling refined metal yet. That means the stock holds risks that established producers avoid. And this is why distinguishing real risk from fake risk is so vital. If you dump your physical holdings because of a fake story about a tax deadline, you might be exiting at the worst possible moment. The fundamental thesis for silver is unbroken. The supply gap remains. Industrial hunger from green tech and electronics is expanding. Central banks continue hoarding gold. The only variable that shifted was sentiment, briefly. And sentiment can flip overnight. Now let's touch on the psychology here, because you need to see why these scare tactics are so effective. Metal investors are naturally suspicious of authority. That is usually why they own gold and silver. They doubt the state. They doubt the fiat system. They want wealth outside the dollar. That skepticism is a survival trait, but it also creates a blind spot. When a voice tells you the government is seizing your stack, it validates your deepest worries. It feels authentic even when it is false, so you act without checking. The fear merchants understand this. They know exactly which triggers pull your strings to spike engagement. They weaponize that trust for views, clicks, and sometimes to aid their own trading books. So here's my guidance. Retain your skepticism of the state, absolutely. But be just as skeptical of the voices screaming fire. Apply the same rigorous logic to panic videos that you apply to federal news. Demand proof. Ask for the source. Verify before you move. Because the people trying to terrify you rarely care about your portfolio. They care about their own metrics, which might mean ad revenue, selling a course, or steering your behavior. Now, what should you watch instead of fake deadlines? The actual trends in the silver space are far more compelling. We just witnessed one of the wildest volatility windows in recent memory. Prices touched historic peaks. They collapsed nearly 30% in a day. They rebounded violently. The structural argument for silver stands firm. The multi-year deficit persists. Demand from solar and EVs is accelerating. The central bank gold rush puts a floor under the entire complex. Fiscal nightmares regarding national debt and currency devaluation are not vanishing. These drivers did not change because of February 15th. They didn't change because of the price chop. These are macro forces that will unfold over decades, not days. So, while the clickbaiters want you sweating over a calendar date, the smart money is watching the fundamentals. They're positioning for the long haul. They view volatility as a discount, not a danger. Which team are you on? The calm investor inherits the wealth that the panicked investor throws away. Here's a question for you. Answer in the comments, because I need to know. Did you encounter the February 15th panic videos before seeing this one? And if you did you think about selling? I ask because I want to gauge how deep this fear campaign has penetrated. Your replies help me decide which myths to bust next. Let me leave you with a final framework for the next scare. The February 15th narrative is recycled noise built on ignorance. The date is a legacy admin deadline. Form 1099-B hits only specific sales. Form 8300 hits only massive cash piles. Owning silver hasn't changed. Nobody is tracking you. The real threat isn't the metal. It isn't the tax man. It is emotional decision-making. It is selling the bottom because a stranger convinced you the end was near. Staying educated, stoic, and deliberate is not just a nice idea. It is how the wealthy avoid catastrophe. It is how they accumulate while the herd destroys its own capital. The market is wild. It will stay wild. There will be more hoaxes, more panic loops, more efforts to control you. Every time you have a vote, you can react with your gut, or you can verify the data and act with your brain. I know which path builds an empire. I hope you do too. Before I go, remember to join our WhatsApp community. The link is below. That is where I post real-time fact checks on these exact stories. And follow us on X. When the lies start spreading, we debunk them there first so you don't get trapped. Thank you for watching. Thank you for being part of the gold-silver market family. If this report helped you dodge the panic, hit the like button. Share this with a friend who needs a reality check. Someone out there is about to sell their stack because of a lie, and you might save them from that error. Subscribe if you are new. The next scare is already brewing, and I will be here to dismantle it. See you in the next video. Stay sharp, stay collected, and never let manufactured fear dictate your financial future. One last thing. You must understand how intel flows in this sector. This niche is packed with strong views and hidden motives. Some are dealers who want you to buy. Some are creators who want you to click. Some are traders who want prices to swing. That doesn't make them villains, but it means you must filter everything through a shield of doubt. Ask who wins if you believe the hype. Ask what they are selling. This February panic is the perfect case study. Someone made content that terrified millions. They got massive traffic, and they profited from your anxiety, whether the threat was real or not. Meanwhile, the people who sold low gifted their wealth to the people who held on. That is the game. The steady hands collect the chips from the shaking hands. Understanding that mechanic is key to survival. So the next time you see a doom alert, breathe, question, and then decide. Because the winners aren't the fastest reactors. They are the most accurate ones. And accuracy demands ignoring the noise to see the signal. That is our mission at Gold Silver Market. No hype, just the clearest truth we can find. Okay, I am signing off. Join the WhatsApp, follow on X, subscribe, and I will see you soon. Take care. The markets are rough, but you have the wisdom to navigate them.